Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:31 p.m. that is Central Time. Today is January 21st, and today, of course, was the first full trading day following the inauguration yesterday because it fell on Martin Luther King Day, which was a federal holiday. So we had the 10-year yield compressed by 5 basis points. And since it's the region of both the peaks from 2024 and 2023 and the 5% psychological level, then a little bit of steadier action is to be expected. And we might also consider that that is the market giving the Trump administration the benefit of the doubt that they're not going to flagrantly abuse the fiscal concerns of the bond market. But then we also have the fact that after hours yesterday, the announcements by President Trump that he was going to impose tariffs on Canada and Mexico on the 1st of February, well, that did cause some volatility. And then we also have today the international response to the inauguration. So when we think about what the stock market performance was globally, it was generally positive. And Asia was in positive territory, not in a dynamic manner, but up. The Hang Seng, for example, was up about 0.9%, whereas the CSI 300 on the mainland was pretty much unchanged. The ASX 200 in Australia was off its peak, but up about 0.2%. Then in Europe, the FTSE 100 was up about 0.33%. The CAC in France up about 0.5%, and that is despite the fact that there was rather damning statistics about the demand for champagne around the world, which was another sign that the demand for luxury goods is becoming a lot more picky, because just last week we had the announcement from Richemont that the sales of Cartier watches has held up admirably well. So we're talking about two different demographics here, and certainly a little bit more choosiness in the luxury goods sector. But one thing we can certainly say is that a great deal of negative sentiment has already